A very good afternoon and welcome to HYCM's Look Ahead webinar with myself, Giles Coughlin, the Chief Currency Analyst here at HYCM. In this presentation, we're going to be looking at the key market events that are coming up for this week. And of course, we're going to be looking in depth with the US election, the main risk event for the week. Just as folks are coming into the webinar, let me say a very good afternoon and lovely to be having you. Remember that as we go through this webinar, the whole idea of this webinar, it's an educational process. So you look over my shoulder, the shoulder of a professional analyst, someone with professional market understanding, having worked for a fund, and I will show you how I go about making my decisions so you can learn from them. What this isn't, it isn't a signal trading service where we talk about one currency pair or one commodity and then that becomes a buy or sell signal. Obviously, because the market situation changes so regularly, the whole idea of these webinars is that I show you how to recognize the changes, how to recognize when sentiment has shifted, so you can essentially make trading decisions for yourself. So in time, you won't need someone like me because you know how to make these decisions for yourself. So that's the whole idea of these webinars. I'm trying to do myself out of a job and most importantly, inform you guys about how to make good trading decisions. So without further ado, let's get stuck into the week ahead. Also, the main event, of course, is the US election, and that is exactly what we're going to be starting looking the thing. Hang on, I'm just going to quickly reply to someone who's messaging me. There we go, just letting them know I'm on the webinar. Okay, so looking at the 538 website. Now I'm going to give you this because this tells you the latest polling information for the US elections. So let me just send this to everybody. So I'm going to put it in the question and the answer box. Let me just see. I'll put it in the chat box. That's going to be the best one. Okay, so this is the website I'm sending you. This is 538. Now they have Biden in the blue, because Biden is a Democrat, and that's the blue color in the US. Trump is the Republican, and that's the red color. The respective polling organization 538 have Biden with an 89 out of 100% chance of winning the US election. Trump has a 10 in 100, so we're roughly a 10% chance of winning the US election. You can see that over time, that has been expanding in Biden's favor. Now, a couple of things to say. First of all, to say, generally speaking, the betting markets are less confident than the polls. The betting markets have Biden's a chance of victory, last time I looked, around 65%. So I just want to show there is a bit of a difference here. But both betting markets and polling markets are expecting a Biden victory. Now, what might that mean? So let's look what that might mean for markets. If we have a clean Biden victory, and also if we have a Democratic blue sweep, so we have the Senate and the House of Congress going to the Democrats, we would expect the following. We'd expect US stocks and European stocks to go up, because the awaited US stimulus bill would be expected to come. We would also expect weakness in the US dollar, especially against the Australian dollar and New Zealand dollar. Finally, we'd also expect the US dollar Chinese yuan to fall, because China would be happier with a Biden win. Now, the reason for this is because China hasn't been enjoying all the tariffs that President Trump has been putting on them, and thinks that if we had a Biden victory, yes, there'll still be some antagonism between the US and China, but a lot of President Trump's protectionist policies will be reversed. Okay, so that's one to be looking out for. US dollar Chinese yuan downside in the Biden victory. We would also expect upside for gold and silver. Now, if you notice, I'll just go over to the charts. just notice how much gold has been underpinned despite the recent strength in the dollar. So we've seen gold has really been quite resilient over the last kind of, week or so. It's been basing off that 1860 level and pushing up to that R1 pivot zone today. So that strength in gold tells me there's a lot of gold buyers. So a Biden victory, and what you should see, and this is a potentially good trade, is a Biden victory, a break of that trend line. So if you get a break and a close above that trend line, that would make sense for buyers. Stops running underneath the recent lows, looking for a retest of that 2040 region. So that would be definitely one trade to really look at. So mark that. Gold, Biden victory, look for a break. The trigger will be a break of that trend line, and a break on that trend line, enter with the break and close, and looking for a retest up to 2040. Now, with the US stocks, just note this. Over the last kind of, couple of weeks, we've been seeing US stocks being bought. Now, the recent downside in US stocks has been a number of reasons. One, the disappointment over the US stimulus bill. Two, rising COVID-19 cases. So stocks are a bit pressured by the rising COVID-19 cases. But if we get the election, then all of a sudden the expectations are that a US stimulus bill is coming. So a Biden victory should be supportive of US stocks. You can see there we're at quite a decent support level around that 3,200 region. So that's well worth keeping an eye on. So with the US election, that is the main risk. Now, if we get a Biden victory, these are the stocks that are expected to rise as well. Just take a look at those. These are the stocks. You can take a screenshot that are expected to rise, according to JP Morgan, on the Biden victory. This is the Biden equity basket. This is what JP Morgan are recommending should rise in stocks. Obviously, Tesla, you've got Tesla there, the very well-known tech car company. And that's obviously because Biden is very, very for green energy and green technology. So one other, headline stock you'd expect upside on would be Tesla on a Biden victory. Just give you folks a chance to take a screenshot of that so you've got it. Now, if we saw a President Trump victory, now remember this is the unexpected event, but if we did see it, we'd expect US stocks to rise again, but European stocks would potentially be more in the balance. Now, the reason for this is because you'd expect that tension between the US and Europe to carry on. Remember, President Trump has a lot of protectionist policies. He wants to make America great, and that does involve trade wars and trade tariffs, and he's quite, that's what he thinks works. So he really likes to use that trade tariff tool. If he was in for a second term, you'd expect that trade war, that trade tariff mentality to continue. So you'd expect to see potentially European stocks be more neutral. Now, that's just something to be worried, but you would expect US stocks up, but European stocks potentially more neutral. And as well, remember, Europe is struggling with the COVID-19 cases, which are rising, red shutdowns, France, Germany, Belgium, now in the UK expected. We'll cover that a little bit more in a second. We would also expect US dollar strength. Now, if we just go over to, let's have a quick look at the dollar index. You can see the dollar has been strengthening over the last week or so in anticipation of the US election. The dollar has been acting as a safe haven currency. You can see that as equity markets fall, we've been seeing the dollar rise. So when you get heavy equity selling, that's why we've been seeing some dollar strength. If we see Trump victory, the expectations are that you'd see the dollar rise. Expect the key area to look at is this 94.50 to 95 handle. That would be a very key area for the US dollar. Trump victory, expect immediate upside in the US dollar. Now, with the other impact, you'd expect the US dollar ruble to fall. Russia prefers a Trump win. China wants a Biden win. Russia wants a Trump win. So expect US dollar ruble to fall. And again, upside expected in gold and silver. The same outlook remains for gold for a Trump victory as it does for Biden. Now, why is that? It's because the underlying fundamentals for gold remain excellent. Those underlying fundamentals remain excellent for gold because we've got very low interest rates across the world. We've got, just hang on, just 1 minute, sorry. Very low interest rates across the world, low Federal Reserve interest rates expected to remain low until 2023. We've got rising quantitative easing, which devalues currencies. We've got equities that are valued very highly. We've got cash actually losing value in the bank when you allow for inflation. So all of that is positive for gold. So whether we get a Biden victory or a Trump victory, we can expect more gold upside. That is why gold has been really better underpinned than you'd expect, given the falls in equity markets. So that's just something to keep your eye out for gold. That's the star contender for one of the best opportunities coming up. This is President Trump's equity basket as well. So just have a look there, and if you look, you can see these are the equities that are expected to benefit from a Trump win. Just take a little screenshot of that. This is according to JP Morgan. Interesting to see a couple of some airlines, hotels, restaurants, real estate, internet retail travel expecting to really benefit from a Trump victory, as well as some banks. Okay, I hope you've managed to take a quick screenshot of that so you can look at it. Of course, if you want me to go back to any screens, just type in the question panel and I will go back for you. The scenario 3, and possibly the most likely outcome, is that we should see no clear victory and a contested outcome. So in scenario 3, we would expect to see US stocks up and European stocks initially down due to uncertainty if there was no clear victory. US stocks and European stocks initially down. So this is on the scenario where no clear winner can be called on the night. We'd expect US dollar upside on uncertainty, and we expect US dollar yields to fall. Okay, so that will be the scenario for no clear victory, and that US dollar upside, we'd expect the same sort of neutral to sideways movement in gold and silver that we've been seeing recently. So that is one to really keep a careful eye on. So they're the 3 main scenarios. That's the main things to watch. Now, other news that's been very significant has been the German, France, Belgium, and UK lockdown from this Thursday. So these are nations which are going back to national lockdowns in the Eurozone. Yeah, so that's that is the issue. Okay. Germany, France, Belgium, UK from this Thursday. Now that means, I'll just go over to the main chart. So I'll just go over to this. There we go. Now that means that today, and this is for today only, I have a short-term downside bias in the euro-US dollar. Now, if we get a retracement up to that 117 level today, but this is for today only, I'm expecting sellers, and my target will be this 1.1664 level. Now, this is the reason. We've got the COVID shutdowns, Germany, France, Belgium, now the UK. That's negative for the euro. We also have the European Central Bank. They've confirmed more stimulus is due to be coming at December's ECB rate meeting. So that all lends itself towards a downside in the Eurozone. So that's one to look out for, but only for today. It's not to last any longer than today because the US election risk will come to the fore. But any retracement up to that 117 level today, expect to see downside in that currency pair. So that's one thing to be looking out for. Other key risks, obviously, is Brexit deadlines. We've got presidential election and the Bank of England stimulus meeting. We'll look at that in a minute. And the main event coming up is an EU summit to sign off a deal, November, early December. That is the kind of getting towards the deadline. Remember, the actual deadline for a UK-EU trade deal is the 31st of December. That's when the transition period ends. So if there's no deal agreed by the end of this 31st of December, that would be a no-deal Brexit, and that would result in heavy pound selling. So we really, really are at the very end of the timetable. But of course, these timetables have been extended before. They could be extended again, but this is what's anticipated. Some progress has been made, said today, on fishing rights. The key rights to be looking at is fishing, state aid, and equivalents for financial services. Some progress has been made on fishing, and key issues need to be made on the state aid. So they're kind of the hot topics. Any progress in those, and we should see the UK and the EU enter what's called the tunnel period, where they head towards the tunnel to get that deal signed off. Still not there. The market is still anticipating the EU and the UK to actually get a trade deal. They still haven't got it yet, but the expectations, and that's why we've seen the pound being supported, is that they will reach a deal. Okay, so that's something to be keeping an eye out on, keeping looking. Don't forget, here's the summary intermarket correlations to be looking at coming up for the elections. Have a quick look at that. You can see how this results in a risk on or risk off trading. Obviously, with risk on trading, you expect Aussie, New Zealand dollar, Canadian dollar upside. You expect Japanese yen, US dollar, Swiss franc downside. In a risk off market, you expect exactly the opposite. Aussie, New Zealand dollar, CAD downside, Japanese yen, Swiss franc, US dollar strength. So that's something to be looking at very carefully. Don't forget, if you're not yet an HYCM client, there's a number of different opportunities we have for coaching. So if you are not yet an HYCM client, please do sign up, and you can benefit from one-on-one coaching with myself. Just mention that to the account manager when you get set up. Now, the other thing I want to show you is the other main events, because despite the US election, we also have some pretty big events coming up. Today, we haven't got anything coming up. We've got ISM PMI data, but because the US elections are just coming up, they're just going to fade into the background. So that's nothing particularly decent for today. The positive PMI data we had from China and Europe have helped support equity markets, but again, the focus is all on the US election. On Tuesday, we have the RBA cash decision and the rate statement. Now, this is the expectations for the RBA to cut interest rates by 0.15%. That's been expected for some time now, okay? So you can see it was from about last week we started seeing the Australian dollar sell off. And that sell-off in the Australian dollar was just simply because the expectations was for a cut of interest rates from the RBA. Now that the RBA are about to cut interest rates, that's been pretty much priced in. There's no surprise there. The interest rate cut won't make an impact on the Australian dollar itself. And here's the expectations, that there'll be an interest rate cut to 0.10%. The expectations also that they'll lower the 3-year yield target to 0.10% from 0.25%, and they're also expected to purchase longer dated government bonds. They're the three areas they're expected. So one pair I'm looking at very carefully is the Aussie New Zealand dollar pair, right? And the reason I'm looking at this pair is because you can see the Australian dollar's been selling off on expectations of this interest rate cut. Once they do that cut, then you might see some Aussie New Zealand dollar upside. And look at the bond yield spread. This yield spread is the risk profile between Australia and New Zealand. So a yield spread, which is this orange line, is the bond yield of the Australian 10-year bond plotted against the bond yield of the New Zealand 10-year bond. Do you see how closely the currency pair tracks the yield spread? These yield spreads are very useful tools, and the yield spread is basically a risk profile between two countries. Look, as the Aussie New Zealand dollar yield spread rises higher, what do we see? Aussie New Zealand dollar pair rise higher. As the Aussie New Zealand dollar currency yield spread moves lower, what do we see? We see the Aussie New Zealand dollar pair move lower. At the moment, we're seeing a little bit of a divergence. Low Aussie New Zealand dollar, higher Aussie New Zealand dollar yield spread. Okay, so if we get post RBA that yield spread rising, we'd expect this Aussie New Zealand dollar to catch up. You can see here prices at this good support level 1.0600, and yield spread moving higher. I'd expect the Aussie New Zealand dollar to catch up as well. So that's one to be keeping a careful eye on post the Reserve Bank of Australia. So what are we looking for? We're looking for them to do what the market expects, or maybe a little bit more positive. So if they said something like, no, now we've done the rate cut, we don't expect to change, cut rates ever again, the next rate move will be up. See something like that, and it'll be positive for the Aussie. Obviously, if there's no rate cut, so say they don't cut rates at all, and they keep it at 0.25%, then you'd expect to see fast upside in the Aussie New Zealand dollar. You'd expect to see that really, buy quickly. The next major event is obviously the US elections going on all through this, so that's going to be eclipsing most other events. But Bank of England rate decision, important on the Thursday. Now, here's the expectations. Everything to stay the same. No change expected. But the Bank of England is under increasing pressure to cut interest rates further. And they have been talking about negative interest rates, not in the way that they're definitely going to cut rates negative, but just the tool is in the box and can be used potentially, at least in theory. So the key thing to be looking at is, does the Bank of England mention anything here about negative interest rates? That's going to be very, very key. I'm going to send you a link, hopefully, to an article which I've done on central banks. Okay, and this tells you what's happening with the major central banks. So let me just... Right, okay, I'm now sending this to you in the chat box. In the chat box, this is an article I've just written over the weekend, which outlines the major central banks. Do check that out, check it, share it, spread it out amongst your friends. It's a great resource and definitely one to be looking at. So any interest rate cut, that's negative for the pound. Any opening up of negative interest rates, negative for the pound. But remember, with the pound, we're now balancing two major risks. One, rising COVID-19 cases in the UK. The same day, the UK goes into a national shutdown. Thursday, November the 5th, my apologies. Second, remember it's Brexit negotiations are ongoing. So you've got to balance those up with any interest rate decision from the UK. Now, the Federal Reserve, they've got their latest statement. So the expectations are at the moment they're going to keep rates the same for at least 3 years till 2023. So this has potential to move the market. Particularly, this will come after the US elections as well. So we have to look to the way that the Fed responds to what's happened in the US election. The thing that you'd expect from the Federal Reserve is that they use this rate statement to really ask for the US stimulus bill to hurry up and be passed. So that is something that you need to be looking at carefully, okay? You need to look at that very, very carefully for Thursday. Friday, we have non-farm payroll. So again, that has the potential to move the market. If unemployment rate is falling, that's good. We want that to be falling. We want average hourly earnings to be rising, and want employment change to be rising as well. Unemployment rates, I want that to be falling as well. So that's that's for the US dollar. Okay, so it's the US dollar non-farm payroll data. So the most positive equity markets would be average hourly earnings rising, non-farm employment change rising, and unemployment rate falling. That will be most positive for US markets. Remember, with the US, that the US is a consumer-driven economy. About 70% of the whole GDP of the whole of the US comes from its consumer. So the job market is very, very important for the entire US economy. And as long as the job market is being supported and is not as bad as feared, given the COVID-19 shutdown, that is positive for US equities. So do keep a very careful eye out on that, which will be coming out on Friday. So as you can see, we have huge risks coming up this week across the board. Now, remember, with all of these risk events, we have to remember the ongoing risk events, US election, rising COVID-19 cases, the hunt for a vaccine. All of these can potentially move sentiment in and of themselves. So we've got to balance these factors up together. Okay, I hope everyone that's been helpful to get you ready for the coming week. And I hope that we can keep ahead of the market for this week. Remember, the final word I'd say is, even though I've shared the expectations with you, remember this: in a huge event like this, sometimes you have unexpected reactions. Now, let me just show you a little bit of a warning. In the US elections of 2016, most analysts were saying that, it was here in November 2016, what they were saying was that if Trump had a victory, it would result in yen strength and equity markets would fall. Well, if I just show you what happened at the time, we'll just look at the S&P 500 US equity markets. You'll see on the Trump victory, the yen started to rise, but then it snapped back up very, very quickly. So we actually saw the yen weaken and the US dollar Japanese yen pair rose higher. So in other words, what was not expected to happen happened. So just be aware of that, particularly in terms of risk. This is a major risk event, and sometimes large moves take place that take market participants by surprise. That's just part of trading. So just to be aware of that. And you saw equity markets were expected to fall. And actually, Trump's victory started an equity market rise that lasted from 2016 all the way through to 2018. So expect the unexpected. I hope that is helpful. Hope that's got you ready for the coming event. I'm just going to quickly go back to the main screen. So if you haven't taken a screenshot, you can take a quick screenshot of the basic things to expect from a Biden victory, a Trump victory, and no clear victory. They're the main scenarios. Okay, folks, that's all we've got time for today. Hope that's been helpful to you. Don't forget that if you are an HYCM client, we are back here at Wednesdays. So it would be really good to see you back here on Wednesday for looking at the, hopefully get some more clarity on what's happening with the US election. Take care, everyone, and thank you for attending. Goodbye.